Hey, welcome back, everybody, to another episode of FinTech Fridays. Joined this week by Michael Vandi. Michael is the founder or co-founder? Founder, love it, of Addy AI. And you and I think we may have met virtually first, and I'm not sure. We connected at IMB or
Oh, I
seems like
think
we
we
ran
met
into each
here,
other.
but we didn't connect.
Not yet. Okay. Well, we are connected here on the FinTech Fridays podcast, and what I love about this podcast is when I get an opportunity to learn about somebody new to me, which if it's somebody new to me and it's a company new to me and a product new to me, chances are there's at least one other person that deserves and needs to know about this person. And hopefully that's what we're going to do today, Michael.
Awesome. Excited to be here. Thank you for having me.
Yeah, right on. So let's get into it. So you founded Addy AI, but we're going to go deep into Addy in a moment. I'd love to understand your background and then the problem you saw and sought to solve with Addy.
Yeah, I mean, we can go very, very deep. So I was born and raised in Freetown, Sierra Leone, that's in West Africa, to a single mom. My mom was a high school teacher. So growing up in a household where my mom was a teacher, my mom was just always making sure that I have as much education as possible. Is what would happen is she would teach the afternoon shift and I would go to school in the morning shift. So I'd come home from school and my mom would not be there, but then she'd find tutors to come homeschool and teach me at home. So I always joke that I had like two education. I went to public school and I was also homeschooled because the same tutors that were teaching me at school would then come with me at home to homeschool me. So that went on for like years. And I got a fascination with computers. I got my first laptop when I was 7 years old. I think I might have been the only kid in the neighborhood with a laptop in West Africa. And I just started tinkering with things. Fell in love with coding when I was like 14 years old. And then I applied to come study computer science in the US, which I did at University of Baltimore, did a bunch of extracurricular activities there, and then worked at AWS as a software engineer before, worked in something called the NASA Suits Project, where we're building spacesuit informatics displays for NASA. And then we wrote a bunch of research papers on that. And then I quit AWS to do my master's at Carnegie Mellon, and that's when I started diving deep into AI, and that's where actually the first version of Addy was born.
Really? So what year would have that been when the first version was born?
That's 2022.
So it's pretty wild, right? When you think about, well, first of all, from your seat, I can only imagine how much you've seen advance in such a short period of time. But from the outside looking in, especially as it relates to AI, like 2022 was as well have been decades ago.
I remember like the biggest thing in 2022 was you can only share like 1,096 tokens, that's like 1,096 words to the model, which means that you would have to separate your prompts if you have long context. And then I think like 6 months to a year later, Google came out with their Gemini model that took 1 million tokens, so you could share an entire book with it. So yeah, I totally get it.
So what was the problem that you were seeking to create a solution for?
Yeah. So Addy actually started as an email assistant. So we automated emails. The product was built on YouTube Live. I have a YouTube channel where I live stream coding. So just coding, just building an email assistant for myself. Launched it on the internet, did really well. About 10,000 people signed up for it. But a subset of those people who signed up for it were loan officers who were just looking to optimize their emails. I did a bunch of customer interviews with them. I was still at school, by the way, doing my master's. Did a bunch of customer interviews with them, like hundreds and hundreds of customer interviews, and then just found out that we might need to personalize this product. So we started building a library to train AI models to personalize email communication. Like they talk to borrowers all the time via email. A lot of the context is there. And then one of the things that we also did was once we started training models, we had this one customer, which was a lender in Tennessee. We started asking them, well, what are some of the bottlenecks that you're facing? And application collection was a bottleneck. Document collection was also a bottleneck. Responding to borrower questions was a bottleneck. Managing all the regulatory guidelines was also a bottleneck. So we're like, well, we should actually really build a product for this. So we put up a landing page and then shared it on Twitter. a couple more IMBs saw that, booked demos, and then we just started taking in customers after customers and customers. And then the next thing you know, you're building an AI mortgage tech company.
So crazy. So I hope people kind of picked up on that. It started because you noticed a certain cohort or segment of people that were in your email newsletter or your communication or in your database, whatever, right? Were of this job title, right? And so cool. It's like it's the typical way most of us got into mortgage, which is totally by accident. Congratulations.
It was exactly by accident. I was finishing up school and I was like, I need to find something to do. So I just sorted out the users of our email application and then sorted them out by frequency of use and then the industry that they were in. And mortgage was one of the top ones.
So crazy, so crazy. So help the audience understand today with Addy, how lenders and loan officers are working with your product.
So what we've built actually, it's the first fully automated AI loan processor. An application comes in. We have an AI agent that we've trained with thousands and thousands of lending guidelines. So imagine like a conventional loan application, bank statements, W-2s, all your pay stubs, things like that. You have a set of checklists that it needs to go through. We have an AI agent that scrubs that document, all of the documents over those checklists, all of the items that you need to happen. Does a borrower have 3 large cash deposits in their bank accounts? All of those stuff. And then does it in 4 minutes. So it does the initial validation in just 4 minutes. And then after that, we have built an underwriting agent where we've been able to train it with Fannie guidelines, Freddie guidelines. So what these loan originators are doing is asking that underwriting agent questions. Maybe they're looking at a particular loan, a borrower has a DTI of XYZ and the credit score of this, which loan programs would fit them, and then it would give them the answer immediately. What we're also doing is that after the loan comes in, we create a needs list of documents that need to be submitted, documents that have been submitted, like a gap analysis. But we not only create that gap analysis, but we have these AI agents that fire up, go call up the borrowers to request those documents because loan officers spend weeks chasing after documents. So we've been able to automate all of that. And our goal is to just automate the entire processing stack so we can have mortgage loan officers focus on originating loans and being in front of customers and get more loans in the pipeline as possible.
Love that. I love that. So when you talk about the AI, the agents calling out, describe what that looks like and sounds like.
We've seen two camps. We've seen two camps of lenders. We've seen the one camp of lender is like, well, I don't mind my borrowers knowing this is AI, so disclose it immediately. This is an AI automated call. We're looking at your application from Horizon Mortgage, and it looks like we're missing one of your most recent pay stubs. Can you send that over? And then we have the other kind that are like, well, we don't want this to sound like AI at all. We want it to sound completely human. And then for those guys, there is a possibility, a feature that we have where we can clone the voice of a particular originator, and then it would sound as human as possible. The models are getting better. They're actually getting very, very uncanny. I saw a demo yesterday for one of these voice models that I could not even recognize who was the human and who was the AI.
Yeah, it is. We've been looking at a few of those ourselves, and it's amazing on the voice side. And I've started to watch, a couple people are playing with like video, which is really crazy. Like one example was a guy told me that he trained for 3 hours. He trained the AI with him on video, reading different scripts, and then started to, upload scripts to be read back on video. And it's just like, again, 25-second blurb side by side, live real person versus AI agent. If I'm just glancing and listening and not like hyper focused, couldn't even tell.
Yep. I know one of those AI avatars that you're talking about on Instagram, I think they got 100 million views last year on their Instagram account just by training that AI avatar, and then they give it the script and it reads the script. And I watch that account. I love it because they talk about current events and news, and I don't care at all that it's AI.
Yeah, that is so wild. Yeah, it's like you're consuming if you think about it, well, we can go on a different tangent. I don't want to go on any political tangent, so we'll stay away from that. it's still a little heated. So again, let's double click a little bit. So what I'm hearing is that you're hyper focused on the loan manufacturing process, but the very entry point of loan manufacturing, right? So it's gathering docs and doing the back and forth that typically would be done by the combination of a loan officer, maybe a loan officer assistant, and potentially a processor. Have you started to understand like the ROI, the potential savings and costs and time? Has that started to become kind of more evident for you as you're growing?
Yeah. We've measured actually how long it would take for us to process a full loan file with around 28 documents, and it takes 4 minutes. And then we've benchmarked that against how long a human processor would do it, and it's around 4 hours. And that's if you have all of the documents available, which is not always the
Right.
case.
Right.
So that's one of the time savings that we're providing as well. But also, the cost to originate a loan is just growing astronomically. I read this blog post from 2018, but I think the cost then was like maybe $9,000, gone a lot higher now. So in 7 years after that blog post was made, problem still hasn't been solved. But
Right.
I mean, we're now at an inflection point where large language models can not only understand numbers, but they can understand context and semantics and the relationship between numbers. So they can do income calculation really, really efficiently, but then they could also relate it to the guidelines if there needs to be certain exceptions that need to happen for particular borrowers. Maybe you have like a travel nurse, and then they work in 5 different states, 5 different kinds of income, and then you have to be able to consolidate all of that with a combination of a really smart large language model that has been trained on all of the regulatory guidelines. You can have it perform that income calculation for almost 99, maybe 100% of all income types. The originator can then focus on being in front of the customer when they need to talk to a human, making sure that they're doing lead generation, and then getting as much loans into the pipeline as possible.
I love it. I mean, my mind's racing on where the intersection of Addy and FinLocker can kind of play because if you think about it, what we're focused on with our technology and consumer experience and loan officer experience is a little bit left to the left of point of sale, right? We tend to operate in this area that we call point of thought. So when the consumer's just starting their journey towards home ownership. One could argue though that a major component of readiness is having all your stuff in order, ready to go.
Yeah.
And so in some ways it's never too early to start packaging up, and analyzing documents, data, et cetera. And so, like I said, my mind's racing on, if we knew we had someone that came into the FinLocker ecosystem and self-selected that their goal was to buy a home in 9 months, we could put some logic in the platforms together that said, at about the 6 month mark, let's start gathering documents from this consumer based on what we know about their desired, zip code, purchase price, loan amount, down payment, blah, 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 blah. We, of course, FinLocker would have a lot of direct source data already used in our readiness assessment. And we could paint this picture of financial readiness and application readiness and bring them together. That could be a pretty powerful use case.
I like that you use the word assessment because that's pretty much what it is. And when I think of assessment, I think of like a test. And that's what the loan officer is doing. They're assessing your documents. So if we take it, it's sort of like how you have the pre-SATs, like 11th grade, you have your pre-SATs, and then 12th grade, you have your SATs. By the time you get to 12th grade, after taking the pre-SATs, you're much more prepared for the SATs.
Yeah. Yeah, this is the pre-SAT version of an application, the pre-app. I mean, it's fascinating. It's fascinating to me just how fast. Again, we opened up with this, but how fast the whole AI space is moving. How you're in the middle of it. How do you stay on top of the rapid advancements that are going on, and how do you make sure that you're not iterating either too fast or too slow relative to where the overall market's going?
Yeah, that's a great question because AI is going 100 miles an hour, but then the mortgage industry moves maybe 30 miles an hour.
And that would be speeding, by the way, if we were going 30 miles an hour.
Exactly. So you have to find a reasonable middle ground. And one of the things that we try to do is we try to get more young, smart people who are just working on AI to prototype things and then work on cutting edge stuff that's not really production ready yet. That we can see, hey, this is where the industry is going. We're not ready to productize it yet for mortgage, but this could be really good 6 months down the line. So we just did a hackathon about a couple weeks ago where we had 50 engineers in a house for 2 days and we had thousands of dollars in prizes, and then we give them bounties on different AI mortgage products to go build. And then they were able to build them. Some of them were super advanced, but we're like, hey, we could actually start looking at these kind of things, getting these people into the industry. But it's also getting a bunch of people excited about mortgages. We have a running joke that no one wakes up in the morning and says, I cannot wait to go disrupt the mortgage industry.
Right. That's
And that's
true.
something to do.
Yeah. It's just like no consumer ever wakes up and says, I want to go get a mortgage, right? They want to buy the home. The mortgage is the means to the end. It's the vehicle to get them to their real goal, which is home ownership. And I think things that you're doing, things that we're doing, and others are doing in the space to kind of bring more transparency, to lift the veil of mystery on some of the things that happen in the process, ultimately lead to, these are my words, but ultimately lead to a more confident, less anxious home buyer that hopefully ultimately leads to successful, sustainable home ownership.
Yeah. Um, I do have a question for you. So I like that you use the word point of thought. And I think for mortgage loan originators, how they win is not at the time when the customer is applying for the loan. It's after the loan's closed and before. After the loan's closed, staying in touch with them. We've seen so many MLOs like they don't even like keep in contact. Even the processing stage is not the most important stage.
Right. Right. No, I mean, if you think about it, you nailed it on the head. It's what by and large, once the consumer's in the manufacturing plant, sadly, if the experience is bad, they're going to go through it and they're going to finish it, because it's just more often than not, it's too cumbersome to rip themselves out and go start somewhere else. Um, But if that experience is so brutal, the chances of a repeat customer are like nil, right? So it does make sense to have the best manufacturing experience possible. And this is something that I spent a lot of time on talking about the consumer experience across a continuum. It might start 18 months up the funnel at the point of thought with education and engagement and nurturing to get somebody to a place where they're confidently ready, emotionally and financially ready to apply. And then, from my perspective, there's an exit ramp off that continuum that goes into the loan manufacturing process. And maybe that consumers in that process for 30, 60, 90 days, however long it takes to get to, final closing and funding. And then the continuum continues with an on-ramp back onto this engagement, roadway, if you will.
Yep.
And it all works together. It all has to work together. But to your point, it's what you do before and after that assures you get a transaction, and B positions you best to get another deal down the road or a referral or whatever else is going to spawn from that.
Yep. Yep. Exactly.
Love that, Michael. Any parting words for our audience that you'd like them to understand about you and your product?
I just think that there has been a lot of interest with AI in mortgage that I absolutely love. Like every now and then someone reaches out to me like, "Hey, I'm working on this particular voice agent for mortgage. Can you mind giving me advice?" And I was just talking to Thomas from Model Match the other day. He's also seeing a lot of new interest coming in. So I like that the mortgage industry is welcoming this. Like companies like us have received tremendous welcome into the industry, which I really, really love. So I think the next couple of years is going to be massive in terms of the number and quality of innovations that we get in the mortgage industry. So I'm just thankful for the opportunity. This is like a space that we really love and we're passionate about innovating in. Thanks to you, thanks to KP, thanks to all the people who are able to welcome innovation in this space.
Love it. Michael, thanks for joining me on FinTech Fridays. To the audience, tune back in 2 weeks for our next episode. Until then, enjoy our lovely mortgage industry. See ya.